Hi clients and friends, Mike Brady here with Generosity Wealth Management, a comprehensive full services firm right here in Boulder, Colorado. Well, I'm giving you my year-end review and 2018 preview. It's pretty late. I kind of have a funny story here. I did this 3 weeks ago. I did a video. It was all ready. I was going to compile it into my newsletter. And in the conversion from my video capture machine to the computer, it basically got corrupted. And it was pretty irritating. Then I was going to redo the video again, and every single day it seemed like the markets were going up and my video became less and less relevant. So decided to do a whole new video here on Super Bowl Sunday. Actually, is when I'm recording this and getting it out to you in the next couple of days. So I don't even know who won the Super Bowl yet, but you do by the time you watch this. 2017, a great year. Stocks, bonds, pretty much everything was up. Internationals were up as well. Depending on what unmanaged stock market index you want to look at, the U.S. market was up into the high teens and into the 20s. The internationals, depending on which market you wanted to look at, the unmanaged international indexes were in the 20s, sometimes even 30s as well. You may say to yourself, wait a second, my portfolio didn't go up that high. And you know, unless you're 100% in the stock market, why would you? I mean, why would yours go up that way? Having 100% stock market exposure is not palatable for most people. The way I like to think about it is this right here is your break-even point, and you've got to have to find the portfolio. A very conservative one hardly moves positive up or negative, hardly moves at all. The more equities move way like this, okay? Big volatility. So you got to find the one that allows you to sleep well at night and stay with your plan. Because essentially, if you're way up here, and nobody ever minds making money quickly, it's the losing money quickly that they hate. And so you've got to find the one that you can ride through these ups and downs with that allow you to stick with your portfolio. I am optimistic about 2018. At the end of the year, the Dow which is an unmanaged stock market index, was almost 25,000. And then through the month of January, ripped through 25,000 to 26,000, and then just had a small correction this past week. Now, I have to tell you that the same people who are all freaked out about it's obviously at a top, it can't go any higher, are the same people who said that at 10,000, at 15, at 25,000. You know, it's not obvious where a top is. And I'm going to, before I talk about 2018, I'm going to talk about that for a second. For some people, I think, hey, when do you think the correction is going to happen, and how bad do you think it is? I think for some people it's like, how's the weather, or what's the price of gas where you are? The way I look at it is it's the wrong question. Okay, if you are looking at it from a week, a month, a year basis, then your time horizon is way too short, and you shouldn't have, in my opinion, any equities. Okay, when you're looking at things from a 5, a 10, and a 20-year time horizon, the question becomes more useless. And you might say, wait a second, I'm 70 years old, or I'm 65 or 75. Wait a second, hopefully you have many 5-year time horizons still left, you know, in your life. And so I kind of think of it, every time someone says that to me, is I think of it like a couple that's been married for a long time. You know that you don't always agree. Sometimes there are disagreements, sometimes small, sometimes big. So you know that, you're expecting it. What if you always went through your life saying, God, I wonder when the next argument's going to be and how big it's going to be? Wait a second, how useless is that? Better use of your time would be to say, how can I get better at weathering those particular arguments that I know are going to come? How can I be better at working with that person, being comfortable? How can I position things now so that we're stronger even after that particular argument, which I know is going to come? So it's no different in my mind. You know it's going to happen. Some are big, some are small. If you don't believe, just like your marriage, if you don't believe that you can weather these arguments, then you got to get out of it, okay? And it's the same way with investments. Why are you in investments if you don't believe that 5 or 10 years from now it's going to be higher than it is today? My experience has been that people who try to time that market might get out too early, feel really good about it, and then they don't get back in time, okay? Or they wait too long and they get down and then they do the absolute worst thing at the wrong time and don't get the recovery. So let's not even play that game. New topic here. 2018, I do believe it's going to be positive. I'm optimistic about it, but of course we're going to have some downs in there. If you think that there isn't going to be some volatility, then you're wrong. I'm going to put a graph up on the screen there. You're going to see at the top number there how the S&P 500, which is an unmanaged stock market index, has done over the last almost 30 years. And the top number is what it ended at. The bottom number is the intra-year decline, meaning that at some point from the top to the bottom, for the high peak to the low peak, it was most of the time double-digit returns. And the fact that we haven't had double-digit intra-year declines in the last number of years is actually the exception, not the norm. So I know it's going to happen. I'm optimistic because I'm going to put another sheet up on the screen there. Corporate profits. Corporate profits are looking really good, very strong, and I think that is going to continue. When we look at the amount of cash that is in the markets right now with the latest tax law change that happened at the end of 2017, I believe that's very favorable for the economy, very favorable for the stock market. So since 10 years ago, when we had a liquidity crisis, a cash crisis in 2007, 2008, corporations have been very rational in shoring up their balance sheets so that they could weather the next storm. And they have hundreds of billions of dollars in cash, and if some of that money is starting to come back into being repatriated into the United States, I think that's an absolutely wonderful thing. I'm going to throw another chart up on the screen, and you're going to see since 1950, the market, it goes up, it goes down, and it goes sideways. I believe that we are in a continued long-term bull cycle, and I see no reason to jump. You've got to have a diversified portfolio. That is absolutely key to my thinking. I think we also need to have a long time horizon of 5, 10, and 20 years. If you have a short time horizon, then it doesn't matter what I have to say. You're not going to be happy. And you shouldn't be invested, in my opinion. So therefore, you've got to have the right time horizon, the right portfolio that allows you, with the right risk level that allows you to stick with it, and the portfolio that's appropriate for that particular time horizon. That's what the question is, not the when's the correction going to happen and how hard is it going to be, and it's got to go down because it's been up. That's just the wrong question. Stop wasting your energy on that. Mike Brady, Generosity Wealth Management. Always love to hear from you. 303-747-6455. Thank you. Bye-bye.